Keith, you like Chevron. We're seeing a situation right now where oil market's absolute flux. You've got incredibly thin liquidity, but your core belief is that we are going to see upside in the oil price, ergo energy stocks, buy them.
That's pretty much where I come down on this. We're going to need dinosaur juice for a long time to come. Chevron is best in class. And on top of that, they've got a healthy dividend, great capital expenditure, particularly in the Permian Basin. And then on top of all of that, they're investing heavily in breakthrough energy. So it's a continuum. It's going beyond just the traditional oil and gas that we know today, but into the future. And so I like the company a lot. It's got a great track record, long established history, and may be one of those super solid places to hang out if the Fed has more shenanigans up its sleeve.
Right. You also like Costco, which is obviously a brick and mortar, online retail stores. Is it really the post-pandemic frenzy that you're playing on here?
Well, I think it's more significant than that. You know, the inflationary epidemic, for whatever terminology you want to use, is very, very real. It's pinching wallets around the world very, very hard, particularly here in the United States, where supply chains and fiscal policy have all collided in this witch's brew of a financial scenario. So Costco is very, very simple. People are changing the way they buy. They're changing what they buy. That particular retail, Costco, has got a membership-driven approach, which means it can manage its expenses and its revenue far better with far more certainty than comparable retailers. I like the company a lot simply because so many people shop there every single day.
Now, I want to just drill in a little bit when it comes to Costco as well, because obviously they've always performed relatively well when you're talking about recessionary environments. But Costco, Sam's Club, are we seeing perhaps a little bit more competition in the sector that we did have previously? And can they deliver much in the same way as they have in the past? And then offshooting off that, are they at a requisite level that you'd invest now and having the expectation that you'd make upside?
Well, that's interesting. Again, I do own Costco, and I hope I'm smart enough to buy more of it for that very reason. I do think there's quite a bit of upside. Sam's Club doesn't release numbers, but Costco's numbers are certainly going up. And, just using my eyeballs, when my family shops there, the store is full. People are smiling. They're happy with what they're getting, the prices they're paying. Maybe not so much, but you know what? The fact is they can get what they want when they need it. That's significant. We are seeing some competition from the likes of Walmart and coming into the space that Amazon has traditionally absorbed, but Costco is really the play here.
Now, I've got to ask you, because you've given three, and I would suggest relatively solid stock picks, but what are you avoiding right now? Because, a lot of people, would they point to say, for example, the tech stocks would, good, you seem to be fired up, lay it on us.
Well, okay, so there's a difference between the must-haves and the nice-to-haves. So I look at a company like Apple or Microsoft. Those are must-have technology stocks. The world is going to them, not away from them. The stuff I'm avoiding right now very deliberately includes choices like Meta, which I think is going to go sub 100, by the way. I'm avoiding Peloton because an iPad on a bicycle is not a business model. I don't care where they're placing their bicycles. They're going to be the world's most expensive laundry hangers before long. And then finally, I'm looking at companies that were truly pandemic darlings. The world has changed, and people want to get out and live, not be trapped in their homes anymore.
Keith, when you said buy Apple or have a core holding in Apple, I was thinking about Bill Smead. When he was on the show, and he was pretty much like Apple has hit a speed bump when it comes to its growth projections. What do you say to that? What do you make of the skeptics on Apple? And we had Bank of America, how can I forget, downgrading Apple to neutral?
Oh, that is so overdone. Think about it using your eyeballs, right? Everybody's changing what they buy, where they shop, how they consume things. But I've only heard of one person in the entire world, and I talk to a lot of people every single week, only one person in the entire world that is giving up their iPhone because inflation. So to me, that's one of those companies where you're talking about the devices, but you're forgetting about services that have a 70% profit margin. The company is on its way to $1 trillion coming up in revenue by 2030. It's on track. I don't see that as a sell ever. And I hope I'm smart enough to hold it that long.